Okay, Monday, about an hour's into trade. The first thing I want to do is I sent out some charts. I don't know about you guys, but um, I've had some computer issues and router stuff. It kind of started last week, I think, with all Twitter was down and all that fun stuff. Back in, I think it was 2000, Time Warner's routers got hit with, I think it was called a red worm, and that was the first time I ever, after 30 years or whatever of having computers, that was the first time I was ever attacked. And then of course lately, right after that, I lost my first hard drive. Not bad for 30 years, and so far so good. But I wanted to, get the video here. I think I had problems uploading too. Lots of Twitter problems this weekend. So we're starting off here with the CRB, which is the Commodity Research Bureau, and the Wilshire 5000, which is basically the whole stock market. Now, what caught my attention here is that the market's been, commodities have been coming down. Or let's just say stocks have been outperforming commodities here for a while. Okay. We did get a bounce here. Now, we're kind of on a cusp here of, I'm looking for a drought, North American drought, which will send corn and soybeans and everything higher. But usually the year prior to it, you get a hard washout. So I'm kind of sitting on the fence here. Friday, I talked about a bull or bear flag in gold, but like GDX and a few other the indexes in that, they're kind of at an apex. So I have to give them a couple days to see if we get some follow through. Now, mind you, it was, just kind of an intraday bear flag on the gold. But to go back to the price of gold from 85 to 87, it went up as equities went up too. We ran into inflation, and then 87 was the peak in real estate, and then 88 we had a drought in North America, and then by then we were beginning to roll into recession. So what I'm watching for here is that if we get a turn in stocks where equities come down, and then commodities, they don't have to go up. This is the world famous outperformance. If stocks fall 20% and commodities fall 15%, commodities still outperform stocks, even though they both went down. So that's just, you have your little ratio thing here. But I'm watching this closely, and then I go back to like quarterly and stuff. Equities have been going up. Commodities, they did have their little secular run here, but so did equities. Okay. But we're coming down, and here on a quarterly, we have, you get kind of a T on an S1. So we may get some pickup in volatility here. We are in the May period. Typically greens and stuff peak out in like July, but they do have some May ones. So we're at, as volatility picks up, usually you have trend changes. So basically when I sent out the thing on gold, I'll go look at that real quick here. Where's that one? Okay, your charts, share my charts. And then let's see here. Come on, what am I looking for? They're at the bottom. I get to do renumber today. Get rid of a lot of this stuff. I can do 350 charts. And of course, then you have to decipher which ones to send out. Okay, so what I did, let's see here. We'll do it this way. Okay. What I'm gonna do is I'm gonna change some of these around. Like this one, we know nothing's changed forever. And then this one's a daily, but all of a sudden things begin to jam up in here. And so I need to probably do a weekly in here. Kind of like the oil thing. This is a daily, but where am I going to write if oil decides to go up this way, that kind of thing. Like GDX, this is okay. I guess I can go over the GDX since that's what we're talking about here. Okay, so we have the POTUS and the cruise missiles and the non-farm payroll and stuff, and that was the sell-off. Okay, then there's a gap fill here. Then you got your RSI divergence, and then you got a bounce. And then here I wrote about selling at the money calls, which were, I think we're at our pivot lines here is what I was looking at. So now we have more pivot lines here. So right now we got a gap fill you know, you have an R1 and R2. You do get some hooks here. They went a little bit deeper, but I need to move from this to like a daily and a weekly on like on the gold. But the calls, you write the calls, they were, you know, at the money. I think whatever it was, 23 and something, or I can't remember off the video. What are these oddball numbers? I'm sure the chart adjusted. That's probably what happened. I think it was like 23.50 and something, right? Where are we? Well, whatever. It's good because what it was is that if you buy in here and you get called away, you still pick up an extra 67 cents on both of these. So say you bought in on the divergence down here, you know, and also it moves up a buck or whatever, you know, you got a buck, you're happy. Well, you sell off the calls, then you pick up an extra 67 cents each on these as it moves higher. Okay, so like I said, I'm not a big fan of these. These symbols were given to me. I'm not a big fan just due to the fact of, you know, if you're going to play options with the underline, I guess if you're moving, you know, 100 shares or 500 shares, 1,000, you can't get into too much trouble here. You know, you have a range of what, 2480. I guess that is pretty deep here. I'm just looking, I guess that it is from 22 to 23 kind of thing, but I guess a couple of bucks does cause some consternation. But so now I didn't put it on here. This is a weekly, daily. Okay. So what I did here is the bounce from December. So we'll call this an A wave. Okay. And then you have, there goes soybean meal. Okay. A wave, then A, B, C wave. So this is the part of B. And now you have the C swing, which is basically kind of equidistant from here to here. So if this is what, 18.50 to 25 is $7. So $7 into here, this would be 27. So it swings somewhere up into this area again. The highs on the GDX would be about 28. But like I said, we're at an apex thing here. You have something where, you know, if this is just corrective in nature, then the overall trend is still down. And then that's why I need to change these to the little longer time frame. Silver has been the weakest of the bunch here. As you can see, it's pretty well, it's pretty deep here. But what you can run into, as I'll look over commitment to traders today, you may have a normal amount of shorts in here, kind of like the Canadian dollar. And then the silver here was basically a bounce. Right now I'm treating this as just kind of a retest of the 16 area. I wrote down if 16 is lost and the resumption of the trend. Eventually it'll come back down to this trend area. Even from 1987, the markets, gold and silver didn't bottom for another decade. And then we had, you know, we picked up after 96, we picked up in the real estate market again for the next decade. So, I prefer to start accumulating, you know, once silver and stuff goes back down, but, you know, down to the trend line area, then you just start picking up 10-ounce bars, that kind of thing. And when there's no volatility, counter trend bounce, that looks about ABC. So the C wave and up here would be silver would be about 22 on this SLV. But like I said, for right now, I'm just treating the silver as just a retest of the 16 area. Okay. This is the retest area here on the upside, so it should run in this problem another is what, 60 cents higher, 16.80. And I think there was a retest. Yeah, if I pull this line forward, this is a retest, so this would be resistance for right now on GDX, right? Yeah, so on a daily, if I carried this line forward, it'd be a retest in there. And then let's go back again, GDX here. It's sideways, but like I said, the C wave would be up here, and that would mean gold would go up to, let's see here. Do I have that one on hand here? Oh, where did I put that one? Storage folder. Oh, we'll take a quick look here. Gold. Next page. How are these doing? Frothy buyers. Gold. There we go, gold. Okay, so it'd be this. So here I wrote about, you know, daily R1 and weekly R, you know, R1, R2. So here would be on the gold end of things. Here we have where are we at? We're at 12. I'm looking for the 13 number. 1332 is at 15, but I need This is weekly. Is this one daily? Oh, I need to clean that up too. Is this daily? I think this is daily. Oh, it does say daily. Okay, so then these numbers would be, so this is pivot. Wow. 1249. So we're back to the 50, 55 level, 70, and then 95. Okay. 70. Okay, so the whole 50, 55 thing again for support, and then pivot 1270, 1295, and 1322. I will assume if we go back into the 60s and stuff, we're gonna get the 1320 here because they're gonna go chasing after it, because this it looks more of a corrective pattern also. It doesn't have a clear 5-wave move on here, so, and it does, it's corrective in nature, so this would be the target, but you have to get through it. We basically have a lot of sideways. I mentioned before that there's a 10-ounce contract of gold you can play on the futures. There are websites that you can open an account for $300, so you get your feet wet. I can't remember what the margin is on it, maybe $400 or $500, but if gold moves $20 and you have let's see here. Do I have it? No, I don't have it. Well, let's see here. Margins. Whoops. No, I don't want that one. Let me just grab a random website. Whoops. Yeah, margins will work here. All right. Metals. Okay, mini gold. This is I think it's micro or something. There it is, micro gold. I think it's 10 ounces. So it's $420. Okay, and here they offer $250 for day trading, but you get 10 ounces. So if we move, what's it, $60 or something? That's a 150% return. So if you don't have enough to, put in, for equities or whatever, the micro ones will get your feet wet here in metals and stuff. And also that goes back to what I mentioned about with Italy, where they had the referendum, and you guys were right that gold, and then gold was up $9, but time your nug and everything just took care of that. When it got to New York, you guys were underwater. So that's why I like futures and Forex, is that you have access to markets all the time. So I'm going to leave this at this post-it. And then once again, like I said, I'm right now, I'm going to lean that this ratio goes up because of equities come down. But we're at a seasonal period where anything can happen. I talked to a guy about a drought this year. He didn't think so. My brother drives from Minneapolis to Western North Dakota, and he can keep an eye on stuff too, because I lived in the Midwest for 35 years, and you know it. If you're going to get this or that or the other thing. Bugs are going to be bad this year. Oh, crops are going to be good. Things of that nature. So, all right, I think that's that. Well, you guys have a good day, and if you guys got any questions or whatever, shoot me an email, and more to come. Take care.